Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Let's discuss, does Fidelity Solo 401k now support Mega Backdoor Roth Solo 401k? So as always, we appreciate the chance to discuss these great topics. Thank you so much for teeing up all the questions. If there are more questions, please don't hesitate to chat those over and we'll definitely go through those questions. First, let's highlight some of the resources. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern. We're back again now for our afternoon session, which is 1 p.m. Pacific, 4 p.m. Eastern. You can easily find us every single day. For example, if you subscribe on YouTube or LinkedIn or Twitter, we go live in all those platforms. So subscribe. If you could like the videos, if you find it helpful, that'd be super helpful to get the word out. Tomorrow, we'll be back to discuss in the morning, avoid solo 401k confusion, know the requirements A through Z. And in the afternoon, we'll be discussing whether or not Vanguard solo 401k supports Mega Backdoor Roth Solo 401k. But let's now jump into the content. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's take a look at this infograph. So the answer in short is that Fidelity's Solo 401k plan, their basic plan, does not support Roth or Mega Backdoor Roth Solo 401k contributions. At the same time, though, Fidelity will open up an account for a third-party plan, like our plan, that does allow for the Mega Backdoor Roth Solo 401k. So we're going to talk about how you can have a Solo 401k plan and have the account at Fidelity, but have the ability to make those Mega Backdoor Roth Solo 401k contributions. And the way to do that is to set up a plan like our plan, but then open up the accounts at Fidelity. So we're totally neutral, for example, on where the accounts are at, but we're very hands-on in helping our customers open up accounts at the bank or brokerage of choice. Fidelity is going to be the top brokerage option. So let's compare, though, the free Solo 401k plan, the basic Solo 401k plan at Fidelity, the quote-unquote free plan, versus our plan, which is going to allow for making the Roth and the Mega Backdoor Roth, as well as other great features. So let's start with the basics. So account opening. So if someone were to go to Fidelity to open up their basic Solo 401k plan, they're going to have to complete the adoption agreement and other paperwork. Whereas with our process, it's just a quick 1-minute online application to give us the information we need. Then we draft the paperwork. We draft the adoption agreement. We draft all the documents that are needed to create the 401k plan that's going to allow for making those Mega Backdoor Roth contributions. Now, of course, Fidelity is going to require that the account be at Fidelity, right? The brokerage account has to be at Fidelity. With our plan, you have the option. I mean, you certainly can have the account at Fidelity, but you also have the option to have it somewhere else. Or you could have both, right? You could have accounts at Fidelity plus accounts somewhere else. Now, Fidelity doesn't charge anything for their plan, but the effective cost of our plan is also nothing over the first 7 years. And that's because our plan makes the self-employed business eligible to claim $1,500 in Solo 401k tax credits, which is going to more than cover our fees for the first 7 years. We charge $650, which includes the $525 establishment fee, plus the first $125 annual fee. So over the first 7 years, it's less than $1,500. So Fidelity's plan only allows for pre-tax contributions, doesn't allow for Roth contributions, doesn't allow for employee Roth, doesn't allow for employer, doesn't allow for Mega Backdoor Roth contributions. Whereas our plan certainly does, right? It allows for all of the above. Could be employee contributions made as Roth contributions, employer contributions made as Roth contributions, even Mega Backdoor Roth contributions. For 2025, with our plan, if you have the self-employment income to justify it, you're going to be able to contribute up to $70,000 as a Roth and Mega Backdoor Roth contribution. Or if you're 50 or older, $77,500. Or if you're age 60 to 63, because of the new super catch-up contribution limits, up to as much as $81,250, which ultimately could be made as a Roth and mega backdoor Roth contribution. In addition, our plan allows for in-plan Roth rollovers. So this is where you're moving money from a pre-tax status to a Roth status. Could be an in-kind transfer from a pre-tax status to a Roth status. So Fidelity's plan doesn't allow for Roth contributions, doesn't allow for in-plan Roth rollovers either, whereas our plan does. And moreover, we handle the required tax reporting, because when you move the money or the asset from an in-plan pre-tax status to a Roth status, that's going to be reportable. That's going to be taxable. And we handled that required reporting to report that as a taxable in-plan pre-tax to Roth conversion. Our plan also allows for solo 401k participant loans. So this is where someone can withdraw money from their solo 401k and use it for any purpose whatsoever. It could be an emergency purpose, could be any purpose. It's not going to be subject to taxes or penalties as long as it's documented as a loan and paid back according to the loan payment schedule. So we prepared the required loan documents as part of our service for no additional charge. And then the payment schedule would just be monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. And then, of course, our compliance support. We're fielding questions every day from our customers. Could be about contributions. We also, as mentioned, prepare the loan documents. As mentioned, we handle the tax reporting, the tax filing. Excuse me. So such as like a 1099-R. So if you're making a mega backdoor Roth contribution, that would need to be reported on a 1099-R. Or if the value of the plan exceeds $250,000, the plan would need to file an informational tax filing called a Form 5500-EZ. We handle the Form 5500-EZ as an optional free service. In other words, no additional charge for our customers. We do it under the electronic filing system to make it easy for the customer. Moreover, our plan allows for true alternative investments. So, of course, you're going to have the option to invest in a wide range of brokerage type investments through the Fidelity account that's set up for our plan. But in addition, the plan does allow for investing in real estate or crypto, private placements, private stock, notes, precious metals, etc. We mentioned the 5500-EZ, the 1099-R. We mentioned the ability to open accounts not only at Fidelity, but other banks, brokerages, cryptocurrency, and alternative investment platforms. We mentioned the tax credit. So again, it is possible, it is most certainly possible to have an account at Fidelity that allows for the mega backdoor Roth solo 401k, but you can't go to Fidelity to get that account because their solo 401k is a basic plan. But you could come to a company like us that supports the mega backdoor Roth, that has the experience to guide you through those technical steps, whether it's contributions or the 1099-R, and still have your accounts at Fidelity so you can invest through that Fidelity account. All right, so now we have some more content we want to go over, but let's start to go through some of these great questions. We appreciate you bringing the questions. And if you're finding this to be helpful, please like, as it helps us to get the word out. Please feel free to subscribe. Again, we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, back again at 1 p.m. Pacific, 4 p.m. Eastern. We're on Twitter, LinkedIn, StreamYard. We're on YouTube, of course. All right, our first question here. For the after-tax contribution from C Corp to my solo 401k.net after-tax account, does my plan allow me to do a mega backdoor to a personal Fidelity Roth, or do I have to move to my solo 401k.net Roth account? I have the personal Fidelity Roth account to move the standard $8,000 in 2024 as an after-tax contribution and backdoor to Roth. So it looks like What you're saying is that you are making a backdoor Roth IRA contribution where you're making a non-deductible contribution to an IRA and then moving it over to a Roth IRA. And on top of that, you are self-employed, you have a solo 401k plan with us, which of course means that you're able to make voluntary after-tax solo 401k contributions. And now the question is, can you transfer those voluntary after-tax solo 401k contributions over to a Roth IRA as opposed to keeping them in the solo 401k plan? And the answer is yes. You have the option to move those voluntary after-tax contributions either to a Roth solo 401k or to a Roth IRA. And it can be a pre-existing Roth IRA that you already have, right? Now, whether you move the money to the solo 401k, the Roth solo 401k, or whether you move those voluntary after-tax funds to a Roth IRA, that's going to be reportable on a Form 1099-R. And we have a form on our website that we use to capture the information that's needed to prepare that 1099-R, which we handle as an optional free service for our customers. So the answer is yes, you can definitely move the after-tax funds out of the plan to a Roth IRA. There's no need to meet a triggering event like you often do when you're moving money out of the solo 401k, even if it's going to another retirement account. There's no triggering event that applies to voluntary after-tax solo 401k funds. So our plan would certainly allow for those funds to be transferred out of the plan to the Roth IRA. Great question. Does my solo401k.net plan allow consolidating personal Fidelity Roth accounts into my solo 401k Roth account and vice versa? Now, when you say personal Fidelity Roth account, I'm interpreting that to mean a Roth IRA. So the Roth IRA rules don't allow one to transfer money from a Roth IRA to any type of 401k, including a solo 401k. So because of those Roth IRA rules, you can't transfer Roth IRA money to the Roth solo 401k. Now, it is possible to transfer money from the Roth solo 401k out of the plan to a Roth IRA, provided that you've met a triggering event. So typically that means you got to be at least 59 and a half or older. But again, one exception to those triggering event requirements would be voluntary after-tax funds, which, as we just mentioned, can be transferred out of the plan to a Roth IRA. Excuse me. Then this is a good question here. What are the advantages of consolidating to my solo 401k Roth account as opposed to, say, a Fidelity Roth account? Well, you can't transfer from the Roth IRA to the Roth solo 401k, but as we just discussed, it's certainly possible to transfer the voluntary after-tax funds to a Roth solo 401k or a Roth IRA. Now, reasons that individuals would choose to keep the money in the plan is because they may want to preserve the ability to use those funds as a 401k loan. In other words, you could later borrow those funds as a 401k participant loan because our plan allows for 401k participant loans. In addition, you could later invest those funds into alternative investments. As mentioned, right, one of the features of our plan is that it allows for investing in true alternative investments. So if you later wanted to invest those Roth funds into, say, crypto or a private placement or real estate, you could easily do that through our plan. Whereas if you transferred those voluntary after-tax funds out of the plan to a Roth IRA, especially the Roth IRA at Fidelity, that's not going to allow for investing in true alternative investments. So those are some of your top considerations or reasons why folks would choose to keep those voluntary after-tax funds in the plan by transferring them to the Roth solo 401k. I started my solo 401k in 2024. I'm not sure if the auto contribution was enabled or not. How can I check if I qualify for the $500 tax credit? Well, if you look at the documents that we sent to you, if you see that there was a deferral election form, for example, in the packet, then that would be a good way to confirm. But let me see if I can pull up your email here and just flag it. And then after we're done here, I'll shoot you an email just to send you a link to the deep dive webinar that we hosted with an IRS enrolled agent that goes through step by step how you claim the credit. So I see your email here from the invite list, and I'll send you an email after we're done. Okay, yeah, I see your plan. Thank you so much. Yeah, we'll follow up with you after the webinar. I flagged your email here. Thank you. Please verify that if my C Corp profit sharing is going directly to my solo401k.net pre-tax account, I will only file it in 1120 line 23 and nothing on the W-2. That is correct. An employer contribution, which is also referred to as a profit sharing contribution, is not reported on the W-2. Instead, it's reported on the employer's tax return. So if your business is taxed as a C Corp, you're exactly right. It would be reported on the 1120 line 23. How should you treat bonuses that I get from the C Corp in addition to my salary? What is the best practice for getting bonuses that are not profit sharing? We use it to maximize the pre-tax retirement and backdoor Roth contributions. So if you're trying to use the additional income to justify contributions to the solo 401k, it has to be reported as earned income. That means it would have to be reported as W-2 wages. So if you got additional W-2 wages, you could use those additional W-2 wages to justify additional contributions to the solo 401k, obviously subject to the limits, etc. But you can't use owner income, right? Income that's reported not on a W-2, but as the owner of the business, cannot be used to justify a solo 401k contribution. Because the purpose of a solo 401k is to be able to save earned self-employment income in a 401k account. Is the 60 to 63 rule for 2025 contribution limit based on being 60 at the beginning or the end of the calendar year 2025? I'm turning 60 in April of 2025. So happy early birthday. And the answer is that as long as you're 60 to 63 during 2025, the individual would be able to justify those, the individual would be eligible to make those super catch-up contributions, assuming they have the income to justify those additional contributions. So yes, it would apply in that situation. To confirm, I can make an employer contribution to my Roth 401k, and it is a deduction to my S corporation, but then I report it to my solo 401k to include the income on my 1099-R, correct? That is correct. So our plan does allow for making employer contributions as Roth contributions. So per IRS Notice 2024-2, those employer contributions are reported as tax deductible on the employer's return. For example, the 1120S in the case of a business taxed as an S corporation for the year for which the contribution is made. Let's assume that the employer contribution is deposited in 2025, but for 2024. So that means that it'll reduce the income on the 2024 employer's tax return because it's a tax deductible contribution, but it's still made as a Roth contribution. So it needs to be made on an after-tax basis. So now it becomes taxable to the employee for the year for which it is deposited. So in that scenario, because it's deposited in 2025, it would have to be taxable to the employee on their 2025 1040. So it would reduce the employer's taxable income for 2024, the year for which the contribution is made, but then raise the employee's taxable income for 2025, the year in which it is deposited. And that gets reported on a 1099-R that's issued by the plan to the employee as a taxable as taxable income, and then they add that income to their 1040. Okay, thank you so much. We appreciate that great feedback. And thank you so much for the good participation. Thank you for the great questions. We'll just end it with a discussion of the deadlines. Again, if you find this video to be helpful, please subscribe and please like to help us get the word out. All right, so let's go talk about the deadline. So there's still time to set up a plan here in 2025 and make 2024 contributions. So now the type of contributions that can be made will depend on how the business is taxed. So for example, for a self-employed business that's taxed as a sole proprietorship, it's still possible, thanks to the Secure Act, to be able to set up a plan here in 2025 and make all types of contributions for 2024. Now, the employee contribution for 2024 would need to be made by April 15th. So the individual would need to set up a plan in time to make those employee contributions by April 15th. The employer and voluntary after-tax contribution for 2024 can be made after April 15th, as long as the person files a timely extension for their business tax return. Now, for a business tax as a sole proprietorship, that means filing a timely extension for their 1040. In that case, they would have until October 15th to make the employer and or voluntary after-tax contribution. Now, for all other business types, could be a partnership, an S Corp, a C Corp. If the person didn't sign up with us before the end of last year, or otherwise didn't set up a basic plan somewhere else, like let's say at Fidelity or Schwab, so they didn't set up a plan anywhere, and now they're trying to set up a new plan here in 2025. If your business is not taxed as a sole prop, right? Let's say you're an S Corp, then it's too late to be able to set up a plan and make employee contributions for 2024, but there's still time to set up a plan and make employer and or voluntary after-tax contributions for 2024, as long as the individual sets up the plan in time to make those contributions by the business tax return deadline, including extension. So let's say that the business is taxed as an S Corp and the individual filed an extension for their 1120S, such that they now have until September 15th to set up a plan and make either employer and or voluntary after-tax contributions for 2024 by that extended tax return deadline. Okay, great. That's a common question this time of year, so we wanted to just spend a couple minutes on that. Again, thank you so much for the great participation. Please subscribe if you find it helpful. Please like if you find it helpful. We'll be back tomorrow with some more great content. Avoid solo 401k confusion. Know the requirements A to Z. That'll be the morning session. In the afternoon, does Vanguard solo 401k now support Mega Backdoor Roth solo 401k? All right, until next time, everyone. Thank you so much for the great participation. We appreciate it.